Hello, my name is Cici. Today, my group member Connie and Sylvia are going to discuss the financial report of the car sales company. We will focus on the main activity of the company, the intangible asset, and the cost or fair value of the company. Firstly, Sylvia will discuss the question 1.
As for the question 1, the car sales is a website which people trading the cars, motorcycle, and caravan online. The car sales attracted more Australians interested in buying listings or selling. As for the scale of the car sales, which is on over 600 people in Australia, they promote their business by developing the world's leading technology and advertising solutions. They are trying their best to provide the most conscious and accurate service for customers. In order to avoid the misunderstanding caused by communication, they update the technology as much as possible to achieve the fully automated trading process. Also, they provide the vehicle inspection, tires, finance, warranty, and insurance service on the website to make the customer easier to sell and buy. The vision is to provide the better car purchase and sales experience for every Australian. Makes the customer has more confidence even though they do not know their ship's car and car very much and not familiar with the process. Every year, they are more concentrated on their products and growing up in the ever-changing customers need to give them the greatest help. As for the performances, during the year 2017 to 2018, the car sales has been achieved the 860,000 units, an increase of 70% over the last year. They have been connecting 92,000 of the telephone, replied 41,000 email, and online chat reached 5,000. The average service level is 88%. The average customer satisfaction is 80%. As for the revenue parts, in this year it's up 19% from last year, mainly because their core classified advertising business performed well. In our main adjustments, which include Terra Sales, Saranton Finance, and Redbook Inspect, they are also achieved double-digit revenue growth. We are satisfied for our last 12 months performance and contributes. This performance shows that the profit of core business is increasingly expanded as the company continues to use the operating leverage, which offset once again by our fast-growing early stage, lower margin business. After the adjustment, the net profit after tax increased 10%, to reflecting a strong return to shareholders in the year of continued investment in the business for long-term growth. The evidence shows that in the year 2017 to 2018, the volume of used cars increased in the market feedback, and the sales of new cars were not stable compared to used cars. The next one is Cici, which introduced the question 4.
Thank you. So in my question, I will focus on the goodwill and intangible assets such as computer software, company brand, and customer relationship, and how the company carrying their impairment testing and what the company generating unit are. Firstly, goodwill represent the excess of the cost of a gain over the fair value of the group's shares of the net asset at the day of their acquisition. The measurement of goodwill is that goodwill is tested for impairment in a yearly basis or more frequently if event or change in some situation. For example, it may be impairment test and is carrying at cost less accurate impairment loss, gain and loss on the disposal of an entity include the carrying amount of goodwill relating to the entity sold. Goodwill is assigned to cash generating unit for the purpose of impairment testing. Secondly, the computer software is to be identified as development cost of the company and internal intangible asset. Costs happen in developing product or system, and costs happen in acquiring software and company's license that will contribute to future period financial benefit through revenue generating or cost reduction are capitalized to software and systems. Thirdly, the company brand and their relationship with customer. Company brand and customer relationship will be identified as intangible asset since it will provide future economic benefit into the business. Acute brand are writing off over a 10 years period. Accurate customer relationships have a limit useful life and are carrying at fair value at acquisition date less accumulate depreciation and impairment loss. Depreciation is calculated using the straight line method and assigned to the cost of the asset over its estimate useful life, which is between 7 and 12 years. Lastly, the goodwill, the cash generating unit, and goodwill is assigned to the group cash generating unit and test yearly to determine whether they have suffered any loss. For the purpose of assesses impairment loss testing, asset and group at the lowest level for which they are separately cash inflow, which are largely independent of the cash inflow from other assets or group of the asset. Now is Connie's turn to talk about question 5.
I'll talk about question 5. Consider the items include the property, plant and equipment, and the model between cost of revaluation is to be preferred to provide a true and fair representation of the company's asset. Under the AASB 116, after recognition as an asset, an item of property, plant, and equipment shall be carried at its cost less any accumulated depreciation and any accumulated impairment loss. The company calculates the value of an asset in the future based on historical cost, whether it is depreciation or impairment loss, which essentially are loss of part of the historical cost of the asset. Furthermore, the residual value and useful life of the asset are reviewed on each reporting date and adjusted as appropriate. If the carrying amount of an asset is greater than its estimated recoverable amount, the carrying amount of the asset is immediately written down to its recoverable amount. Gain and loss of disposal are determined by comparing the proceeds with the carrying amount. In addition, the group owns most of the ownership risk and returns of property, plant and equipment leased, classified, and financial leased. Finance lease is capitalized at the beginning of the lease based on the fair value of the leased property or the present value of the minimum lease payment. The corresponding rate of obligation is included in other short-term and long-term payable. Each lease payment is allocated between liability and financial cost. The property, plant, and equipment accrued under the financial lease are depreciation over the useful life of the asset, or within the shorter of the useful life of the asset and the lease term. It is not reasonable to ascertain that the group will obtain ownership at the end of the lease term. So that's it for our presentation.
Thank you.
Thank you.